Back to another episode of Hard Money Dispatch. I'm Brian Nibley. Today we have a guest, our first guest ever in the history of the show. It's Gil
I am?
Roberts.
I didn't
Yeah,
know
yeah.
that.
It's always been a solo endeavor up until now since I
Okay.
had. There's a list like 10 people long now. I gave you priority just since we had connected on LinkedIn in the past and it worked out. And here we are. So why don't you go ahead and introduce yourself?
Yeah, I'm Gil Roberts. Right now, I'm working with several companies and projects. Interestingly, even though this is just a gray wall, I'm inside strategy. So I'll see if I can walk around a little bit. There's people working and stuff. So, corporates with taking videos inside of offices. But I'll try to peek my head out the door. But they got this brand new podcast studio. I'll use the second camera here. Really brand new. I'm the first person to use it. I'll just use the second camera to show around. Not a lot going on, but I'll see if I can take us out. At worst, I'll see if I can get us over to the lounge area and get some pictures. So inside of strategy here. That's why I wanted to link up with Brian and be on this podcast. So thank you so much for having me on. Also, I didn't know I was a first live guest, so thanks for that. It's cool. Yeah. So you may dive into some of the projects that are going on. I think that's probably most interesting thing that we got here. So it is related. I don't know how hot button we want to get, but it is highly related to the core versus knots debate. It's the main reason why I'm here at Strategy. There are some teams working to resolve this permanently with a third option that is unrelated to the first two. And it still provides consensus. Everything is mathematical. It's in consensus with both the ones that are available. But a third option is going to be available for the masses that is very different. So one of the problems that we have with this governance debate, which that's more what it is, because we have a certain section of people that are in control on the core side. And we got one guy just on the not side, right? Look, I'm an outsider coming in. My background in Bitcoin is this. This is my third year anniversary. I'm an ex-fiat miner. I did 20 years in the banking sector, equities, derivatives. Started trading Bitcoin derivatives professionally for myself before I actually started buying coins. So I'm still relatively new to the game. So I'm an outsider kind of coming into this. And when you and I were kind of setting this podcast up, one of the things I see is people calling each other Nazis, right? And Cortards and all this other kind of stuff. Now, look, I don't like seeing this. As a financial professional inside of an industry, this is not a good look. And it's public, right? And I still go hang out with some of the bankers, right? I'm kind of play on both teams a little bit in the sense that I still have connections with them. Personally, I've switched and moved over to Bitcoin. I live on a Bitcoin standard as best that I can. However, I still go to their parties and I see what's happened at like DC FinTech Week just about 2 weeks ago, and them talking about how they're doing the entire market cap of Bitcoin on stablecoins as their alpha. All the Bitcoins in the world, they're doing that as an alpha test in the banking system. And the banks are talking about 24-hour instant settlement, low fees, sovereignty over your funds. This is what's coming from the stablecoin crowd. And, when I talk about both to give a juxtaposition, you have all these banks that are competitors that are working together to create Fiat 2.0 so that we have to suffer another century, right? And then you look at the Bitcoin community, and at BTC and DC, you have people heckling at them. There are senators and Congress people there. And we have hecklers in our crowd. So I said, no, we can't do this. There has to be another way. And guess what? There is. It's going to be released very shortly. We're hoping to have it released by Thursday. So you'll be able to have a not knots and not core option. That's going to be a Bitcoin Commons. So if you look at core and knots, they share about, and I'm a non-technical guy, so you have to fact check me on some of this stuff, those listening. But about 95% of the code base between core and knots is the same, right? So really, while knots is different based on its rule sets, code base-wise, it's not. So you just have this large monopoly on Bitcoin operating software. honestly, is unhealthy. It's an unhealthy relationship. They're heckling. They're calling each other Nazis. Like, this is not good for our community. And I think it's one of the reasons for the price suppression here lately, right? It makes me uncomfortable as a Bitcoin holder that this is going on. Because at some point, 21 million is not going to equal 21 million anymore, right? So we need more options in the marketplace. Gavin talked about this many, many years ago, about how that there needs to be more than just core, more than a second option, a third option, a fourth option, a fifth option. We have many options for operating systems on computers, Windows, Mac, Linux. There's like a zillion Linuxes. So why isn't the same thing playing out on the Bitcoin protocol? We have lots of browsers for the HTTP protocol. So we're here at the incubator, not strategy itself. I want to make that clear. I'm here at the hub, which is where they have startups incubating. Unchained is here. There's a bunch of some of these Bitcoin companies. One of those companies is Bitcoin Commons. And Bitcoin Commons is going to share only about 15% of the code base with core and nods. Just enough that all three will be able to work in unison. Why is it vastly different? Well, it solves the governance issue. It solves the fact that only a certain number of human beings, whoever they may be, the past, present, and future, have the ability to change Bitcoin based on what it seems like high school popularity contest. From an outsider looking in, as a professional banker looking in, it's like Citibank CEO doesn't get on Twitter and just drop trains of curse words against JP Morgan Chase, right? It's not how this is a $2.2 trillion one. When Gavin was pulling all these up, it was at $7 billion. Like Bitcoin was super small, 2013, 2014. Here we are in 2025, and we have people just running around insulting each other publicly. And I don't like seeing it. I don't like seeing it. It doesn't scream investment to me. I'll say that. Like, it doesn't, all the no coiners and pre-coiners out there, they're like, I'm going to go look at Bitcoin. And then you just see all this. This is what pops up because it's current event. So we have to provide a different solution that is neither one of those, right? When it comes to the end.
That's really cool. Yeah, I agree that it's not a good look all around. The level of animosity to me seems unprecedented, because I remember back in 2017 there was the block size wars and people were somewhat at each other's throats, but nothing like this. I mean, it was a disagreement and it was kind of just implied that understood that we're going to go this way and this other group's going to go that way, and hard fork will resolve itself. And it just kind of happened that way. This is like some kind of more of a civil war, and there's so much just weird psychological things going on.
Here's the primary issue. It's always going to be some level of civil war because there's a binary outcome on the way that governance is set up right now, which is to fork or not to fork. How about we end forking? That is possible, but still allow innovation and people to do the things that they want to do, and the people that don't want to do them, not to do them. It doesn't require forks. In video games, we call these mods or modules or modifications. See, this is what, again, I'm an outsider looking in. This is what's crazy to me, is that software development is a very mature industry that has solved a lot of these problems. But we're not using what other people, we're going to go remake a wheel as a Bitcoin community, right? Like, if you don't like how the game is played, you go get a mod, right? If you're a video gamer, that makes sense to you. Bitcoin can have modules, play on words, but there's ability for those that want to do ordinals or use Bitcoin as an extraordinarily expensive database, right? To do that without disturbing the people that just want to use Bitcoin as money and want to filter and all these other things, right? So you can have both in the same. We don't just have web pages that are static, right? Like I'm using this through a web app. But did I have to fork the internet to have web applications and static web pages? No, I didn't. No, there's modules and things are added to these protocols. And the fact that we're at this fork or not fork and do this or do that. It's all nuclear option, right? It's just unnecessary. It's also very draining and distracting, especially when we have the stablecoin crowd wanting to eat our lunch. And I bring this up, and I'll expand that a little bit more. And I've made some posts on LinkedIn about this. Bitcoin is not going to like go to zero and die. We're beyond those kind of days. It can die other ways though. So one way it could die is it stays a store of value forever. It never makes escape velocity to medium of exchange. It never becomes the unit of account, and it becomes, in a bad way, gold 2.0, and we all just hoard it, right? Somebody has to die before it gets transferred. That's not money. If everybody took all their money and just hid it and nobody spent any of it, we don't call that money, right? It's like jewelry, right? That's more of what that is. So, is it a status symbol or is it actually money? And one of the tropes when I'm working with some startups and other things here in the Bitcoin community is if it's going to be money, it has to do money things, good, bad, and ugly, right? It's going to have to be money. So with that, we got to stop. I think like with the op return issue, and think of a check, like an old school check, right? That op return to me, that's that memo line in the check. Okay, yeah, it's a good idea to have them. You write little notes, just little ones, right? But you don't want to take up the entire face of the check with the notes or staple a whole nother piece of paper or a book to the check, right? Worth of notes that are in behind. That needs to move over to where it appropriately needs. I'm not against it or for it. I'm saying it's fine, just in the wrong spot. You're playing in the wrong sandbox. There's a wonderful technology over at Rootstock that has an EVM that's backed by Bitcoin. It's all backed by that, and that can work with the Lightning Network. It can work with the op return as it is, right? We don't have to make any changes. And then you got a whole EVM that you can use. You do whatever you want. Whatever you want, games, monkey JPEGs, whatever floats your boat, whatever the market will buy from you. And I'm for it. I'm a capitalist, whatever, right? I don't need monkey JPEGs in my memo line on my checks. That's not where that goes, right? That goes over there. And that's fine. If we don't have this always has to fork or not fork setup, we can allow for these other use cases peacefully, right? We can peacefully have this just like the internet unfolded in the 90s.
Yeah, I like that. And even though I'm generally against that, expanding the memo line of the check, as you put it, I don't want to tyrannically enforce my will on all Bitcoin users and say that you can only use it. I only want to use Bitcoin as money. I would like my node to only route those transactions that have a limit on op return, but that doesn't mean that I'm for stopping. That's another way they're framing it, right? Is, you're pro censorship if you don't want this, and then blah, blah, blah. So yeah, I've been running Core V29 on my node for a while just because I don't know what else to do. I don't know that
right.
not seems okay, and that's cool, but like I don't know that. I mean, there's just one guy behind it. I don't know that I trust it necessarily.
Sure.
And so I'm very interested in the Bitcoin Commons thing, and I would probably start running that. Random question.
We have that's Start9 is the first target, only because of the way to roll software out on a Start9 is a little easier. The Umbrel version is along with it, so it's just going to take a little bit longer to get it into the Umbrel store. We have not made any official application to the Umbrel store or anything like that, but Start9 is aware. With Commons, the background on it, I'm not the progenitor. So Secure Sovereign on Twitter, Josh, is here with me. I'm a guest. He's brought me up here to Strategy. He's part of the incubator. And we're working together, along with some other individuals, to basically bring Bitcoin and the Commons, Hayek, and some other governance structures that allow for non-tyrannical administration, right? At $2.25 trillion, at some point we have to begin building structure around this, right? And I'm not talking rebuild the banks and everybody put suits on. But there has to be some way to resolve this, because at this point, we have blue-collar people's money tied up in Bitcoin, right? These people have nothing to do with this. They have nothing to do with core versus knots. They have nothing to do with any of these governance issues. They're just folks. They're just folks that. Did I lose you there for a second? How's that? Is that better? Okay, excellent. So I'll give a second to pause and then edit from here. So the blue collar folks that are available to buy Bitcoin, not all of them can, right? They don't have anything to do with some of this politicalization amongst these two groups. I'm the same way as an outsider looking. I'm not blue collar, but I'm the same way. I just have my money in this. I have my kids' college fund in this, right? And it's not a good look to have the instability. This is not volatility. That's a good thing. This is instability. And because of the enemies and the powers that be that would like to keep Bitcoin in a little box, they said, well, we can't get rid of it, but we can toss it under a rug, put it in a closet, right? Let the banks buy it all up, and then it's just the bank's money. This is possible. It's hard to explain sometimes to certain Bitcoiners in the community, the amount of money and investment that's occurring over in the banking side with stablecoins, and more so RWAs, it's a lot. It's a lot. You know, you look at here, I'll give you an example over in the altcoin universe. XRP on Friday got a $500 million investment. Here at Strategy, if I'll quote her correctly, I may not, but I'll quote it. Bitcoin, like 2 years ago, got 8 million in grants. That's it, 8. XRP, Brady G got a $500 million, 500. There's only a certain amount of time that foot race is going to go on. And Josh and I get into debates about this, good ones. And I think we see it as the banks have all the customers. And we've won this kind of store of value battle. But we've become blinded to the actual war. Is now we're moving from store value to medium of exchange. There are very large and extraordinarily wealthy incumbents at that medium of exchange called banks. And they have all the customers and have been operating in a vacuum monopoly with their regulator buddies for over 100 years. We have to now fight them. Now, they themselves may take down the Federal Reserve. Right now, we have this situation where it's kind of the enemy of my enemy, right? Because as they move volume, Citibank, JP Morgan, all these other ones that are building all these layer ones, as they move volume away from the Federal Reserve System, that's not good for them. That's how they make their money over there. They're going to be able to basically have a situation where you could save the US dollar, hang on the word dollar, but destroy the Federal Reserve note at the same time. Those are two different things. Nick Bhatia's book, Layered Money, talks about this. You have layer one, which is the treasuries. That's what's issued actually by the government. That's the runaway printing, is the treasuries. The dollars are just created as a layer two money to make those treasuries spendable. Well, what is Tether and Circle and Citibank? What are they doing? They're taking treasuries and creating layer two coins. Now, good news for Bitcoiners is the Federal Reserve will have competition for the first time in its existence as a layer two money. And it won't take long for people to figure out that Citicoin's probably going to be better than the Federal Reserve note. Neither one of them are as good as Bitcoin, right? But just keeping the two in a vacuum, the private money is going to move a lot faster and cheaper. And they're already saying things, as I mentioned, sovereignty, instant settlement, 24/7 availability. Like, this is what's going to come, because it's going to be private sector money. It's going to be built for customers. They have the customer. And you and I, we both have bank accounts, I'm sure, with fiat sitting in it. One day you're going to wake up, and the dollar sign isn't going to change because they're all dollars, but they won't be Federal Reserve notes in there anymore. It'll be Citi coins if you're a Citibank, right? And then we got fiat for another 100 years. Bitcoin doesn't lose, it wins in the end. But do we want to do it in the next 5, 10, 20? Or do we want another 100, 200 years of fiat, right?
Right. So how do you see central bank digital currencies playing into that? Because I look at the investment in Ripple and XRP, and you can go right to their website. And I've tried telling people this who are very pro XRP, but also think that they're pro, freedom and sovereignty and hard
uh,
money at the same time. And
yeah.
it's hard to get them to see that, like right on the Ripple website, it says they're building infrastructure for central bank digital currency, and
Yes.
that's sort of their end goal.
Yeah, CBDC issuer, wonderful, right? They'll play the mint to the Federal Reserve. The mint makes the physical dollars. We'll have a digital mint. I'll use XRP as an example. I'm not a big fan of those guys. You can see me rag on XRP fail army all the time on LinkedIn. He's smart. He gets on the stage. He was at DC FinTech Week right next to the Federal Reserve governor. Fed governor was next. Right? He's great at PR. That's what keeps him alive. CBDCs themselves, with XRP or without, are layer 2 monies again. They'll have to compete. It's why Lagarde months ago said the US stablecoin, private stablecoin particularly, is a threat to European sovereignty. Now, why would a banker say that about another? There's Federal Reserve notes floating around the world forever. So why is a digital private dollar a threat to their sovereignty? Because what it does is the digital dollar, like Tether has done, is much easier to spread. It's very simple for Europeans just to start taking US dollars. It's extraordinarily simple. They just got to get a wallet and then they can take Circle or Tether or whatever, right? Why would they use a CBDC? The CBDCs are to me, it's a desperation play. If you got to go further down the totalitarian scale, you're desperate. Because I've posted this a few times, probably get me in trouble in the future, but on the European Commission, I said, if it's money, why do you need to sell it to me? I want money all the time. I don't need to be sold money. I will take all the monies, like whatever. You're just going to give it to me. Why do you have to make posts on LinkedIn or a lot of these other places to try to convince me that this is good money? Like if it's actual money and I value that, I'll just use it. And that's why it's a threat to European sovereignty, because it could be that all these digital dollars, now they're legion, right? Because all the private banks are doing, all these banks are going to do this. They're legion, it's going to go out into the world and it'll overturn any of the other weaker fiats. Because it's just as easy, and you don't need the Federal Reserve in the middle anymore. They're gone. To just pull in city dollars, city coin dollars, whatever they call it, and be able to just hold those, and I don't need euros, right? And this is the problem. I know we're here to talk about Bitcoin, and I'm circling the drain with the stable coins, right? But I'm saying this is our main competitor, and they're years ahead of us, which is a death sentence. Now, when I say competitor at medium of exchange, are any stable coins better than Bitcoin? Absolutely not, right? Because they can print as many of those stable coins as they want, because they can print as many treasuries as they want, and they won't stop. No government's going to stop getting debt. That's not going to work, right? So we're stuck with the treasuries forever. We get rid of the Federal Reserve notes, though. That'll be nice. But circling around, Bitcoin has an enemy at the medium of exchange. If they just stick JPM coin or whatever, I'll pick some other banks to beat on, there's no reason for me to go get a Lightning wallet. I get 24/7 sovereign settlement anywhere in the world with JPM coin. I don't know if it does that, but you get the idea, right? So why me, a pre-coiner, right? Why in this persona, why would I want to change? I already have the JPM coins in my account. I already have them. Why do I have to go and do all this Bitcoin stuff? My bank has Bitcoin. I don't hold gold. My bank's got the gold. I don't hold Bitcoin. My bank's got the Bitcoin, right? You can see, and this is, Bitcoiners are a class unto themselves in the sense that a lot of them are regular people, but they haven't gone back to get more regular people to come in. And I'm not talking about trying to orange pill the fam or stand on the street corner. It's like, what have we built as a community that makes it easier for a single mother with 3 kids that's behind on her car note to buy Bitcoin? What have we done for her? What have we done for the guy that cannot do self-custody because if he loses his coin, that's his financial future, and he's got child support payments. So if he loses that money, he actually physically goes to jail. He cannot do self-custody. That is too dangerous. He cannot lose a single sat. It's too much liability. We have done nothing for him. We have done nothing for those folks. And now things are being done in Africa for folks in similar economic situations, but it's not happening here in the U.S. And
that's what I was, sorry, go on.
No, please.
That's what I was thinking of when you're talking about the medium exchange thing really is. I heard it put this way at the Unconfiscatable Bitcoin conference back in 2022, I think it was. A guy named Giacomo, I can't remember his last name.
Oh yeah, Plan B.
He said in his view that Bitcoin already is a store of value, a medium of exchange, and unit of account. It's just not evenly distributed, right? It's not all three of those things anywhere, everywhere, all at the same time. For example, in third world countries, a lot of African countries, a lot of Southeast Asian countries, Latin America, it is more commonly used as a medium of exchange. They can see the use case for it better if they need cross-border remittances, they need small, fast transactions. It's easy to see that the value of that use case, whereas most of us were fortunate enough to be in first world Western countries, there's just not a need for that. And that may explain why the banks are trying to get out in front of that before people realize that or start doing that. If they have this stablecoin infrastructure all built out, they'll just naturally gravitate to that first. Sounds like that's kind of what you're saying.
So I think it's Citi. Definitely fact check me on this. Their Alpha program did 1.4 trillion in a month
with existing customers.
Existing stablecoin. Now they're doing it amongst themselves. It's bank to bank transfers right now. But that's how this technology starts, right? They're going to use it in a B2B sense, and then as the customers, which they already have, they already got bank accounts, they've already downloaded, they already have fiat wallets, right, on their phone. They're just going to switch what's inside the fiat wallet. They're already, it sounds like a broken record, they're already bank customers. People, it's super. When's the last time you switched your bank?
Right, yeah.
Anytime
I've got a new account, but I use one or two.
That's what's going to happen, right? And if they bring not all, but some of the little pieces from Bitcoin, some of the little pieces from altcoins that were useful, and they're going to stick it in, we call it a stable coin, and then they're going to back it with, Charles Schwab's wanting to get in the game. They got 14 trillion in assets. 14. We'd have to have, a 7x of Bitcoin? We'd have to be around 700K to just catch up with one bank. These are the boss levels we got to fight next, right? I was joking. It's like that video game where you beat that first level boss and then he transforms in the second, and it's so much worse. Yeah, it's going to be a lot worse. Like we're just arguing. Most of the time I just argue with gold bugs, right? Like, cause we finally risen up the ranks as Bitcoiners to the sense that we no longer have to really talk to the altcoin people anymore. Just, it's like the black sheep of the family. Like he eats over at that table for Thanksgiving. It's now we got to argue with Grandpa Gold over at Thanksgiving, right? Now look, gold's been on a tear. It is what it is. All hard assets are going to, real estate will be next once they drop the interest rates, right? All the hard assets are going to get love because the printing is coming, right? So, and it has to happen with us being stuck at that table. It's not the kids' table with the altcoins, but it's, we're not at the big boys' table either. We're not hanging out with arguing why real estate, and I'm not talking about like single family homes. I'm talking about like 500 unit apartment complexes that churn out $250,000, a week, right? These are operational assets, and Bitcoin's getting there, right? I do lightning routing, and try to earn a yield. You have to operationalize some of these assets. Who was it? I think, was it a mining? I have to look it up. It was on LinkedIn. You may have seen it. There was another company that announced they got like 6.07% on Lightning yield. Bitcoin on Bitcoin. I mean, you can't beat that. And banking has all this stuff. I can go into the bank and go, I don't just want a Federal Reserve note. I want a certificate of deposit, right? Or I want to put my money in money market funds, which has a different risk profile. If you want to get into Bitcoin, you got one option, right? Now it's getting better as a normal person that's not going to geek out and sit there, right? But eventually you're going to get more Lightning options. And we're seeing that in the App Store. I should give that credit. But from a banking app perspective, it's just not there. So as the other project, the reason I'm here, we're bringing that to market too. And it's going to be a kind of a Windows, Microsoft Office marriage between Commons and then an interface for regular humans, right? So you could think of it as like, and I've talked about this publicly before, Bitcoin hasn't had its AOL moment yet, like the internet, America Online. Before America Online, I'll show my age a little bit. I was young, but I got on Gopher, was the first web browser I used. You could only go around to the university libraries. Very boring for a 6-year-old. So, but you could get out on the internet. You had to dial into a BBS, hear all the funky sounds, if there was enough lines open, and then get out and you could look up university stuff. Boring. They shuffle us into school in 1991, and they show us Netscape Navigator. There's pictures on the screen. I had only ever seen pictures made with letters, right? The ASCII pictures, right? So it blew us all away. Now, was images? Now, we've had paintings and images and photographs for a very long time. What was it? It was the ability to browse the HTTP protocol. We do not have that in Bitcoin. How do I browse Bitcoin visually? How would I learn about all these different wallets or products? Well, I got to go out onto the internet. Well, the internet's full of spam and AI slop and all kinds of other garbage, right? And you also have to look back at the Bitcoin protocol via that internet protocol. Security issue. What if you could just surf the Bitcoin protocol? You're going to have an information layer with that, but luckily we have Nostr, right? So Bitcoin with Nostr can provide a visual Bitcoin browsing experience so that, just like with AOL, I started getting emails from my grandmother. That's when I knew the internet had arrived, right? Because I had been using Gopher and then Netscape and playing with computers for years and years, and all of a sudden my Grammy started emailing me. And she's like, I'm on AOL. It makes it easy. Perfect. That way, go back to our examples, that dude that has child support he's got to maintain. Now, he may not run a node, but he will run a browsing experience so he can see everything in one spot. And instead of having to surf the internet at large or go read trolls on X, right? He can just go in, see a curated experience. He types in wallet, and here comes up all the wallet providers, right? Now, I think this is key with our two projects. We are not another wallet company. We are not building a wallet. We're building read-only systems with plugins and app stores for the entire Bitcoin community to be able to come and develop and provide regular humans a visual experience to understand what's going on and join our team. And hopefully, and my phone's up here, hopefully it's as easy and as beautiful, or probably better than your banking app. Most of them are pretty terrible, let's be honest. But some of them give a good visual experience. Now, I'm not talking about like another app like Strike or some of these other ones. It's a operating system or a browser for you to be able to access those securely and privately. So a lot of the reason that this is being built is so that the privacy is built back in. You're not transacting across an HTTP protocol, right? You're not out on the general internet. You're inside of Bitcoin, the protocol itself. Mm-hmm. Right. Yeah, self-directed IRA. Yeah. It has some fees and, for a lot of people it can make sense. It looks cool, but it's overwhelming for a normal person.
Yeah, it does not. It's basically showing you raw data. It's practically like looking at binary code for someone who's unfamiliar.
What we have to solve is, how much did I spend last week on Taco Bell? That's the questions that people are going to ask, right? Or, I don't remember making that transaction. Or, how much money's in my account? And this is something that a browser can do. So let's say you're a Bitcoin treasury company, right? And you may have your Bitcoin across multiple holding styles. You might have coin, you might have some time lock vaulted, you might have some out on liquid, you might have a Lightning wallet. These are, I'll throw this in here just as for fun. You have some root stock, right? Some RBTC. You have these different types. All of them are Bitcoin, right? It's all got Bitcoin backing, like Lightning or Rootstock, or it's Bitcoin itself, right? Wouldn't it be great if you could just see how much you had, just instead of me going from wallet to wallet to wallet, because none of the wallets do all the things, right? And we're not going to make a wallet. What we're going to do is take all those wallet providers and bring it into a visual experience. So I can go, how much money do I got? Because that's why do you open your bank app? Think about the top 3 reasons you open your bank app, right? Zelle somebody some money. How much money is in my account? Because I want a burrito. I'm hungry. It's dinner time here. We're in Eastern. So, how much can I buy this burrito? And lastly, where'd all my money go? Right? Where did it go? Because I saw the balance. I bought the burrito. Now I'm broke. And so
and there's easy ways to connect things, like, some credit card companies have where you can link up different accounts and track it all in there. The bank apps have budgeting apps. You can track and see all the spending. And there's even different apps that you can integrate, like brokerage accounts, and see all your trades. And all we really have right now for Bitcoin and crypto is different apps that allow you to manually, to the best of my knowledge anyway, allow you to manually input things and then kind of get an overview there. But it's basically just stuff you entered, and when things change, if you don't update it yourself, then you have an inaccurate picture.
Yeah, and that's not helpful for a 24/7 market asset that's volatile. You don't want to. You could change that thing every hour. I mean, look at today, up, down, right? Like it's so much. And as I started that example, think about if you're a treasury company, right? It's not just your money; it's your investors' money, and they're highly litigious, right? As if you mess things up. So you have this additional layer of responsibility that's required as a treasury company because of that fiduciary responsibility. Now, you have shareholders, you have investors, maybe your Metaplanet, right? That only compounds because where all of these treasury companies are going, they're basically the new banks, right? They got to operationalize the Bitcoin. They're going to, at some point, the shareholders are going to be like, look, I see Jack making 7. I see this other company making 6. Some of these other more Lightning-focused routers are getting 9%. Why aren't we doing that? And one of the miners has started. It was one of the miners that did the 6.07. I forgot which one it was. We'll have to look that up. I'll look it up. Because what they did is they took that Lightning, the proceeds, the yield, and put it back to increase shareholder a Bitcoin per share for shareholders. They just plowed it right back to the shareholders. What is that? MNAV. So it just increased what they had for that calculation. So, and you're just leaving 6% on the table. Let's say we'll take the low number. It's a 5% of Bitcoin on the table. That means you could have got 5 Bitcoins for every 100 you had. That means you got to hit like 2 blocks. As a solo mine 2 blocks, or you can run a Lightning node. Up to you, right? Running that Lightning node's guaranteed. You might not ever hit those 2 blocks on a BitAxe or something. So, I'll circle back around, but the idea here is that you have to have this browser for the average person, maybe a small business owner that's using Square, right? As well as a power user like an enterprise customer, a treasury or a publicly traded company. You have to have these tool sets available to them, and it has to be useful to humans. Like you go and look at some of this wallet software, you're like, I have no idea what this thing is doing, right? It's hard to look behind. Now, the UX has gotten a lot better, even in the short time I've been inside of Bitcoin, right? But at the same time, like, the banks have all these terrible apps and they keep all the customers. We're going to have to make an app that's 10 times better. That's a browsing experience. And now that there's a zillion wallets and you got vault companies and you got all these different players in the ecosystem, we're going to kind of have to index this for regular humans. The pre-coiners. They're not no-coiners, they're pre-coiners, right? It was easy when there was only 4 or 5 wallets. Now there's how many dozens? Which one should they choose? Some of them are rugs. Some of them are scams. Be nice to have that curated experience for them. It's also nice to have a similar enterprise grade curated experience for those at enterprises, right? So that has to be done, so we're doing it.
Yeah.
It's as simple as that.
Great. That's great. Great work. Definitely needs to be done, like you said. And I think the potential is there to make a much better app because you have access to all this publicly available information on the ledger could all be curated in theory, whereas a bank is just kind of that one private permission.
The applications are like the websites of Bitcoin, right? So websites are to HTTP, that apps are to the Bitcoin-based apps are to the Bitcoin protocol, right? Those web pages, if there's no search, I'm old enough to remember I used to buy magazines with web addresses in them. So you would know what websites to go to. This is pre-Google. This is pre-Google internet. 1994, 95, 96. I still have one at my house just to show my kid. You had to go buy a magazine to find websites. Younger folks don't understand kind of what went through. I'm not that old, but I lived through it, right? And the same thing is playing out. Where's the Google of Bitcoin? Where is this of Bitcoin? Because if it's a protocol and it's money, it has to do protocol things. It has to do money things. We post about this all the time on X. We get all the old tropes over and over again. It's the best money, fix the world, sound money this. Nobody's using it as money. Not to the scale of, for funsies, 1.4 trillion monthly, right? That's what money looks like for fun. They just do it because it's a beta test. Yeah, we're not doing full market caps of Bitcoin in 30 days in coffees at Starbucks, right? We have to get there. What's going to get us there? Well, it's the rest of the pre-coiners. That's who's got to get us there. And we have just left them out. We got all these education programs. We have a bunch of education programs in social services, and those problems are still around, right? It's not for lack of education. There's tons and tons of wonderful people. My First Bitcoin, all those folks, they're doing the best that they can. That's not what's up. And while the number go up brings a lot of pre-coiners in and turns them orange, that's not going to last forever. The CAGR on Bitcoin will degrade over time. As it becomes more and more sound money, the volatility will drain out, and it's a bad thing for us that want it. What are we just going to wait for stablecoins to die out? They've got a new trick up their sleeve. They'll be able to bankrupt out the Federal Reserve note. That's what's going to happen, just like they bankrupted it in 71, just like they bankrupted it in 33, 34 with the gold confiscation. These are all bankruptcies, right? Because you're having to rejigger the layer 1 money, and the layer 2 is no good no more, right? Or confiscate the layer 1 to make the layer 2 good. So eventually, I think this game does play out poorly for them, but none of us are going to be alive when it goes away. See, this is a part of the problem. And your kids and your grandkids may not be alive either to see it. It's not good. It's not good. It's a step forward by going backwards to the free banking era. But if Bitcoin's going to be money, it has to start doing money things. And it's not doing money things very well, right? It's just the action is speaking louder than its words. Now, outside the U.S., we're biased here in the U.S. We live in King Dollar. Why would I need coins if I have dollars, right? So, we're going to see, this is where the battleground really is. You mentioned Africa. That's perfect. Those folks live under hyperinflation. We don't want that to happen here. And similar point is, as a Bitcoin person, fully moved over, I don't like hyper Bitcoinization. That means all my neighbors are poor and I'm the only one with money. That's not great. It's not a good thing. And they're desperate, right? This is not good. This is not good. We want everybody to win so nobody kills each other for resources. That's what's happened in the past. So How do we roll this out, play nicely with the stable coins, at least until one of two things, the capitulation of the Federal Reserve note, or like what Tether's doing, some of these stable coins will come to Bitcoin as we'll be doing their rails. We call those customers. We'd love to have them on Bitcoin, right? They're bringing volume. So those two are good. But once those conditions, whoever's going to move over and do the processing back in on Bitcoin for their stablecoin and the Federal Reserves, bye-bye, it's a knife fight after that between the two of us, between Bitcoin and the stablecoins. Because Savadine says this, all the folks say this, that money is a winner-take-all sport. There's only one monies, right? And right now it's treasuries with the Federal Reserve and then all these other third layer currencies like the euro and all this other stuff. They probably wouldn't like me saying that, but that's what it is.
Gil, you still there?
I am. Okay. I can hear you. Can you hear me now? Can you hear me now? Okay, there it goes. Yeah, so it'll be a knife fight between us and the stablecoin folks, right? Because eventually it's going to be just the two of us left in the arena. And I have a bad feeling if it takes a long time to get to that fight, it's not going to be a great outcome for us. Because all they're going to do is continue to mount up customers and more resources to be able to fend off that last battle. All they have to do is continue to keep this straight out, they being the banks and even the central banks that eventually play along with this whole scheme. It's not good. How long do we want this to drag out? For me personally, we need to get it done tomorrow, yesterday. It's going. Right now, we're seeing correlation, or I'm seeing it, between number go up and adoption. We get new people when it runs up. And that's not a good way to recruit because it's going to come down. Anybody I haven't been around for long, and I've been through a couple of them already, right? It's going to go up and it's going to come down 20, 30%, 10%, whatever. It's got volatility in it. I enjoy that, right? That's why I'm here. I'm here for it. But the average person is not. And if you mess with somebody's money, they usually do not come back. All of us have had a bad experience with a bank at some point, and you're like, I will never set foot in that place again. That's the first thing all the humans think the same way. As soon as you mess with somebody's money, I'll never come back here again. Yeah, because it's like messing with their person. It truly is. I mean, it's theft when they print it. That's true. So for money and the stakes that we have coming up at the medium of exchange layer, I want to make that clear. We haven't mentioned in a while. I'm talking about the medium of exchange. I'm not talking about losing the store value. Bitcoin's not going anywhere to win in the end. It just may be pigeonholed for an extraordinarily long time, which will suppress the price, right? Gold has been harder money since fiat the entire time, and it's just now catching up to what the price should. I think the price of gold should be much higher if you extrapolate it out, like from all the way back to the 1930s or 20s when they started the $28 or $35 redemption, and you extrapolate that, it should probably be much higher than the price that it is now, because they printed a lot more money since then. So, these hard assets are going to have these natural attractants, just like gold. Bitcoin will attract those. But if it's not money, you're only going to attract the same types of folks that were already buying gold anyway. And then we're stuck with fighting gold, which will never fight it off, which is fine. We got to have a shiny pet rock, right? But, gold becomes 10 and trillion market cap and we're 30 and that's the end of it, right? Bitcoin price hits, what's 30 trillion, like 700K or 7K or 7 million, something. It's not the moon, right? Or Mars. It's the moon, but it's never Mars. And we're trapped on price action because that's what the store value, what's gold? The only reason anybody talks about gold is price action. Nobody goes like, man, I was researching gold yesterday and I really like the yellow that it is. Nobody says that, right? They're like, the price of gold's up, let's go buy gold, right? It's always that price discussion. In banks, if you've noticed, even our friends over at iBit have all of a sudden gotten really behind Bitcoin as digital gold. They've gotten really, they fell behind line with that super quick. All of them did, and it's a bit weird. It's a bit weird. Maybe it's nothing, but it's a bit strange. Yes.
Presented as if, okay, this case is settled and it's done now, but all JP Morgan did was fire one or a few traders who were engaged in it and then said, okay, we're done. But they could still be doing it to this day. We would have no way of knowing. And it makes me wonder if...
And launching their own coins, stable coins. It's kind of weird. And then we have this big nuclear debate going on in Bitcoin. All this is happening all at once. Believe me, it's a small room full of really clever people and an unlimited budget at a bank could figure this out and start a bunch of this stuff, right? But I know we're going to run thin on time, so I want to give Commons one more because I think that's probably the coolest thing that we've talked about today. Commons, take a look at it, bitcoincommons.org and .com. I think we have both of them. We're going through the launch. We have some internal presentations this week, and we're going to start taking on alpha testers. But we do have a version that's operational. Thursday, we're going to have it. One of the coolest things with Commons is you can spin a node and get the full blockchain in less than 15 minutes. You have to stay tuned. We've done it already.
Just for reference for viewers. All right, cool stuff. This is being recorded Monday, November 10th. So the Thursday that Gil's referring to would be November 13th.
Yeah, we have an internal presentation here at the hub at Strategy. We're going to get some feedback. We're going to do some releases for some GitHubs. It is version 0.1, but it is in consensus, and that is with knots and core, so it'll all be the same. When it comes to filtering, we're going to let you do some of the optionality on that. We're going to have tons of optionality. We're building this for business. The people that have that want to understand, what's going on and have worries that there's these two warring parties, and just allow you to run the node the way that you want to run it, right? We can also, so we have heavy filtering options. We also have some incentivization not to use op return for monkey JPEGs, but still have them if you want them, right? We're going to have some options, and we're actually going to help a couple other groups. We'd like to increase the return on investment for miners. We love our miners, so there's going to be a way, because we know, and we've talked to a few of them, some of them they do like these ordinals and some of these other things, because it creates more customers in their block space. Remember ordinals, October 23, 500 VB, 500 sats of VB and all this. Miners were having a heyday. Some of them like this op return business, right? They want to run core. We got 11% installation of core 30. If you go to per Clark Moody's website, right? Who is installing this? Well, people that are obviously going to start making money off of it. Ordinals folks, runes, blah, blah, blah. The miners like it, right? And we do believe in economic nodes at Commons. That not all nodes are equal, but some of them are for-profit nodes, right? Not a designation that this is an economic node, they matter more, right? No. It's just that we know this one is a participant, a service provider in the ecosystem, not a household or a consumer, right? If you study economics, you see households and the businesses, the merchants, key to money. They exchange money. You don't tend to pay random entities. You tend to pay the people that you're doing business with, that you need to exchange goods and services with, right? So with Commons, it's going to have the ability to make sure that you're getting the most efficiency out of your either private node, consumer node, household node, whatever you want to call it, or your economic node that's providing goods and services inside of the Bitcoin protocol, right? So miners, lightning routers, treasury companies, payment processors like Square, shout out to them for what they're doing for medium of exchange. They're taking it very seriously. These types, not, Raspberry Pi down in the basement, running Bitcoin Core just to audit because I have a few coins, right? Not that guy. This is going to be able to, when it comes to economic nodes, I want to say that. Commons is for anybody that use, but for economic nodes, it's not that particular setup. So we have the system that's going to be available, or the operating system, we'll say, that's going to be available not to fix Bitcoin. We're not fixing Bitcoin because we're leaving all the optionality up to you. Now, a lot of these other ones do that, but none of them do it to the point where a normal human being can go click, 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 set my node up. 15 minutes later, you have an operational node. You can do what you want with it, right? And you want JPEGs? Click the button. I want them. You don't want them? I don't want them. It's that simple, right? And you don't have to you have to get in there and type in the shell. You don't need to do all that stuff. Yeah, it's 2025, right? What are we doing? Well, and more customers too. Let's not forget, like, the more people that buy ordinals and interact with them and all that kind of stuff, that's more transactions on chain. Block space is an auction, right? So people that want to process now pay more. If you're willing to wait, you pay less, right? And it's a big auction stack. Everybody just says, I'm willing to pay X. People that pay the most are at the top for the listeners. Ordinals are a new customer base, both people that buy them and people that make them, that did not exist prior to a couple years ago, not in a significant way, like this crowd has done. And hats off to them. They have quite a following. For those folks, they use the space repeatedly. They have to have the block space to run their software. If they're storing data on a blockchain, they're using Bitcoin as an extraordinarily expensive database, right? If they're going to do that, that means they have to interact with the chain. The more that these folks interact with the chain, the more expensive it becomes to do on-chain transactions. Yeah, I'll leave it at that. I think that's pretty good. We'd love to have the community come out and test it. We're not claiming to fix Bitcoin. There's not a group of us of a cabal. We don't care if you like knots or core. Doesn't matter to us, right? What we know is that, just like Gavin mentioned way back when, there needs to be multiple of these systems. The multiplicity is security in and of itself. So we'd love the community, once we launch this week, to come out, download, and test it. Play with it, break it, find bugs, rip it apart, throw all the AI at it. We want everybody to come out, see it, enjoy it, tell us what's wrong with it. It's first version. We're going to be able to get more stuff out. And that's my call to action. If you care about Bitcoin, check out our option. At least try it, maybe delete it, whatever. Just come see it. Give us some feedback. That's what we want. Yeah, thank you so much. And I'm so honored being your first guest on this, Brian. I mean, this is absolutely wonderful. Happy to come on anytime that you wish. Yeah, of course. Now, podcasts are super fun. So we'll do it. Brian, absolute pleasure, sir. Thank you so much for having me on. Thanks for everybody that's listening. And go Likewise. Bitcoin. Let's do it.
All right. Sounds good. Thanks, Gil. Talk soon.
Very good.
Bye.
Sure.